So what are some of the things that gives you more conviction over the other setups?
Okay, example, if the stock is previously a very hype up stock.
Hype up, I mean like now maybe Nvidia and Meta, this kind of hype up stocks.
Probably.
Okay.
Yeah. If they drop, like a few years ago, like it was Palantir and Tesla a few years back. Then it was very hype up and then it came crashing down and after it do a bullish signal. So I knew that, some certain stocks when previously they will have a hype up and then if the fundamental is still there and after retracing for 80% or even 90%, right, the chance of a multi-bag is very high because all you need to do is just to go back to the 30% mark from the bottom, right, is 100% already, one bagger.
Yeah.
So these are the times when usually I will go in a little bit bigger, right? And then go for that. And I'll try to identify this opportunity once a while to boost my portfolio.
And this is executed on the weekly time frame.
Weekly time frame, which is more reliable, especially for swing trade, in my view.
Okay, maybe to dive in a little bit deeper, let's say, what stock we're talking about. Palantir, it dropped 90% from the high, so now it's just from $100 to $10. And let's say
now it's already recovered to about $20 over.
Okay, so let's say walking through that setup at that point in time at $10, what are the specific things that you look for on the charts before you enter a long trade for Palantir?
Okay, so my main strategy that I employ is called price action manipulation. So I look out for, in generic terms, things like bull trap and bear traps. Of course, I have different special criteria, but to keep it simple, generic form is bull traps and bear traps. So for Palantir, I think back a few years ago when it was around $7 plus, right, there was a bear trap. So bear trap basically means that, for example, this is a support. The price break below support. So price break below support may seem like just to cause people to sell, but actually it could be a sign that the market, the big boys or market makers are actually trying to take out the stop loss. Because stop losses that being placed there by the people who are long are usually sell orders. And who's absorbing the sell orders? The market makers will be absorbing if someone trigger below the support. So when I saw that on the higher time frame for Palantir, right, and especially it dropped like almost 70-80%, I told myself that there's a good chance, right, that the so-called the big boys are accumulating the position. So on that basis, I actually measure my risk and I see my risk is actually quite low versus the 100% mark, $7 to $14, $15. I think the risk reward is like 1:3 or 4, right? And I told myself it's a decent trade setup.
So I'm just going to try to paint the visualization picture just to make sure I understand correctly. So let's say Palantir goes up to a high of $100, it goes to a 90% drawdown to $10. For that bear trap to occur, it needs to go into like maybe a kind of a range where we consolidate so they can take out the lows of that, the recent lows. And then if there's a bear trap, you look to go long.
Correct.
Okay. Then where would you then typically set your stops and target?
I usually put it at the immediate swing low.
Okay, so just before the low of the bear trap that just happened.
So let's say this is support, the price goes down and goes back up. Then I'll put it just below where it last visited that level there. Then I measure my entry, stop loss, then project.
Okay.
Then take profit target. Usually I like to, for this kind of trade, I like to exit based on discretion. So discretion means I don't just put a take profit like 1:2, I just put it there. Because I find that when I'm doing this kind of trade, I don't want to shortchange myself. What if it can go higher? I want to see the potential. So I will wait for it to move until maybe it hit a resistance or you do what we call a flush. It means big green bars. That's where I will look to sell.
Okay.
And sometimes, even though these two scenarios occur, I may not sell because if the stock have not recovered 100%, I will not sell.
When you say recover 100%, are you referring to the all-time high that was being made? Or 100%
from the lows?
Or from the lows.
Because when you drop 80-90%, right? Like let's say the low is $7. I'll tell myself, since this is the 80-90% low, if I'm right and it rebounds, it should go to 100%.
Okay.
It's the same mental model I have for crypto. A lot of times, a lot of crypto, like now, a lot of crypto drop 80-90%. And if I'm long, I'm not going to take 50%. Because if I'm right that this is the bottom, they should 3-5x at least.
From the price you entered lah.
Yeah. Then around the 3 to 5x zone, right, I'll look out for resistance level. then I'll draw my lines there and I'll look out for exit over there.
Okay.
Like if the line is at 50% mark, I will ignore that line. Basically, that's what I meant.
Okay. And does like volume do you take into account volume when you are, trading in this manner?
Okay, volume is like initial screener, right? A volume will affect the liquidity of the stock. So I like to go for stocks where they have at least 100K average volume, so that like there's interaction between the market makers and the retailers.
Right.
And usually this will affect the bid-ask spread. If the liquidity is like let's say less than 100K, right? Usually the bid-ask spread, you will see that it's a bit wide, more than 5%, which is not very good. We usually want to keep it below 3%.